Hey everyone, George here. So with the holidays upon us, I thought it'd be timely to make an episode on charitable contributions and certain myths that I wanted to bust so that you don't have any caps or limitations on what you donate, and so you don't get anything wrong. So without further ado, let's get started. So if you're new to the channel, welcome. We talk all things accounting for contractors here. And today I want to talk about charitable contributions and go over a few myths to make sure that you make the most out of your contributions and you get full deductions for what you give away. So myth number one is donating your time being tax deductible. So unfortunately, donating your time is not tax deductible. So you can volunteer at a shelter, serve food, build homes, donate professional services, and the IRS says that's wonderful, but unfortunately it's not deductible. So the rule is that you cannot deduct your hourly rate, lost income, value of your time, or professional services. The one small exception to this is that you may deduct out-of-pocket expenses, mileage driven for charitable work, or supplies that you paid for personally. But the labor itself, you don't get any deduction for that, unfortunately. Myth number two is that all donations are treated the same, and that's not true at all. The IRS treats cash, property, and assets very different entirely. So cash donations are the simplest, cleanest, and easiest to substantiate. That being said, they're not always the best from a tax standpoint. Non-cash donations are kind of like audit magnets. Examples are clothes, furniture, tools, equipment, and vehicles. So here's what the IRS requires. The charity must be a qualified organization. There must be a written acknowledgement. You need to establish fair market value, and you need to file an extra Form 8283 with larger non-cash donation. And if your non-cash donation is over $5,000, you need to get a qualified appraisal as well. Most people don't do this and their deductions get denied. And goodwill bags without documentation are not deductible. So what are tax smart things to donate? If you donate appreciated assets, such as stocks, securities, and certain property, you can often deduct the fair market value and avoid paying capital gains tax on the appreciation. So if you bought stock for $10,000 and it's now appreciated to $30,000, you can donate that stock and basically not pay any capital gains tax on that $20,000, but get a deduction for a $30,000 fair market value. That's one of the most efficient charitable contribution tax strategies, and most people don't use it at all. So another myth is that GoFundMe contributions are deductible, and unfortunately they're not. If the recipient is an individual and not a 501c3, unfortunately they wouldn't be deductible as a charitable contribution. The GoFundMe would need to be run directly by a qualified charity and designated as a tax deductible item in order to qualify as a charitable contribution. There are certain circumstances where the GoFundMe contribution can be acknowledged as advertising, marketing, or promotional. However, there are some requirements that would need to be fulfilled for that to happen. Number one, your business would need to be publicly acknowledged in exchange for your contribution. Number two, your logo, name, or services would need to be prominently displayed. Number three, there needs to be documented promotional value of some sort. And number four, it would need to be tied to a measurable business benefit. So for example, if a GoFundMe is raising money for a rebuild after wildfires, your construction company is listed as a sponsor, your logo appears on the campaign page, shared posts, or some sort of media coverage, and the contribution is framed as a sponsorship instead of, say, like a charity, in that case, it would very likely be allowed as a deduction. And that would be under the pretense of, say, advertising marketing. However, if you simply donated money and it's not a 501c3 GoFundMe, unfortunately, it wouldn't be deductible. One other thing to note, as with anything else, if you don't have a receipt or supporting documentation for your contribution, then you wouldn't be allowed the deduction in the event of an audit. So ultimately, what you'd need is a written acknowledgement for cash contributions. This support would need to have the description and not necessarily the value for non-cash items. It would need to have dates and the organization name. So here's my professional advice on this. Feel free to give generously, but give smart, tax-wise. Verify the charity that it's an actual 501c3. Document everything, keep any support you have. You should strongly consider appreciated assets if you have anything in your investment portfolio. And don't assume, always confirm if it passes the test and if you're not phased out by any limitations. So you can always reach out if you have any questions. I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and hope to see you in the next one.